Well, let's take stock of how markets have performed over Tuesday in trade as we open up for Wednesday. The S&P 500 dipped from its record high. Mind you, it clocked a record close on Monday and has clocked a record high on Tuesday, but it dipped from there as investors weighed up Omicron and its risks. New studies, of course, in South Africa and UK last week as well as over the weekend suggested Omicron has a reduced risk of hospitalization and severe illnesses. However, there have been more than 4.1 million COVID cases confirmed in the US this month alone. The Dow notched its fifth straight day of gains despite that, with the Dow rising over 0.5% in trade yesterday. However, the S&P 500 fell very marginally, just 5 points down around 0.1% in trade yesterday. The Nasdaq too, though, was closed lower, and it was lower far more steeper than the S&P 500. It was down over 0.5% in trade yesterday. Moving on to Europe, European stocks rose mildly in trade on Tuesday. Of course, a thinly traded day. It's Christmas week and New Year week, so there's going to be less activity. And European stocks have risen on Monday as well and have risen on Tuesday marginally. The DAX was up 0.8%. The CAC 40 was up over 0.5%, and the Stock 600 was also up around 0.6% in trade. Mind you, the UK index, the FTSE, was closed for trade yesterday. Moving on to Asia, Asian indices closed positive in trade yesterday, with the Nikkei up over 1/3% in trade yesterday. The Shanghai too was up over 1/3%, the Hang Seng up around 1/4%, and the Kospi up around 0.7%. The ASX 200 was closed, of course, given the Christmas break. Asian indices today, though, have opened a complete mixed bag and more tilting towards the red. When I look at the Nikkei, it's down around 0.9%. The Shanghai is down around or over 0.5% in trade. The HSI, which is the Hang Seng, is also down around 0.7%, and the Kospi is also down almost 0.9%. The ASX 200 is the only index holding on to a 1% gain in early trade today. So that's how Asian indices are shaping up. When I look at the SGX Nifty futures as well, that is down around 0.1% in early trade today. So negative cues coming out of Asian markets, and that may possibly carry forward even for Indian indices. When you look at commodities, oil continued to rise surprisingly, and it has risen through last week as well as through Monday and Tuesday this week, as well as has gone higher in early trade today as well. This is despite the rise in Omicron cases. Oil is finding support largely due to production disruptions in Ecuador, Libya, and Nigeria, and also a reported drop in US crude inventory. So these two factors are probably leading to this rise in oil prices. Oil is now well above the $76 a barrel mark, and Brent is above the $79 a barrel mark. That's the highest both of these have been all month. Gold continues to hold out, though. Gold is well above the $1,800 level. It's holding out well there, $1,800 an ounce. When we move to the dollar index and currencies, the dollar index currently is marginally higher versus the same time yesterday, but is still lower versus close yesterday. So it's at 96.17, around 4 basis points lower than it closed yesterday. And when I look at the US 10-year treasury yields, that too is slightly lower, around 1 basis point or lower than yesterday. It's at 1.474%. So well below now that 1.5% mark. And Bitcoin has been on a sell-off. Bitcoin is now over 6% lower in trade today, and it's just below the $48,000 mark. Broadly, that's an outline of how global indices as well as commodities and crypto are doing in early trade just before India opens today.